This is Stephen here. It's January the 20th and we're looking at a trade here, an option trade on the S&P 500. So this morning for our European based clients and for in particular people from the UK and Ireland, we've already put this trade on using the IG index spread betting platform on options. So this is going to be the same type of a trade, except it's going to be on a traditional options trading platform, IBKR Interactive Brokers. So just in summary, what we're going to do, we're going to sell a put option at the 6,500 strike, and ultimately this is where the S&P 500 is now. And this trade will basically allow the S&P 500 fall another 5% over the next 2 weeks, basically, before we would actually see any type of a loss on the trade at expiry. So in other words, as long as the S&P 500 goes up, sideways, or it can even fall, as long as it doesn't fall more than 5% in the next 2 weeks, we make money. And I'm going to show you the probability in this trade is over 95%. So I'm going to jump into the Interactive Brokers platform now, and I just want to remind you that I'm kind of demonstrating this for all people from all walks of life. So this is just a simulated account on a $10,000 account. So the instrument we're using here is going to be slightly different, but for those of you who have larger accounts, you would use the ETF SPY SPY. That will be the best one to use. But because this is a small account, we wouldn't have enough margin to actually cover that trade. So we're going to use a micro version of the S&P 500, which is XSP. So we're going to do that. So we're going to click on trade. I'm going to show you what the option chains look like first of all for SPY. So we're going to do that now. So we're going out, this trade is only going to be 10 days, as you can see here, and you're going to sell the 650 put here on SPY, right? Now this is only a 10-day trade, so the premiums aren't going to be huge or anything like that. But look what you are getting in. You're getting in $160 a contract. So on a 10K account, for example, that's the equivalent of 1.6% in a matter of 10 days. And our probability of getting that return is actually 96%. The reason for that is, look at our break-even price here. Our break-even price will be 648.44. So in other words, the SPY could fall from where it is now, 681.24, all the way down to 648, and we would still make a profit in this particular trade. So I'm going to switch over now, and I'm actually going to use the XSP and go ahead and process the trade for people with smaller accounts. So we'll just change the ticker symbol here, XSP. You're going to see now in a second that this shows up as like a micro version of the S&P 500. So it's a mini SPX index here. We're going to click on the option chain, and we're going to use the exact same expiry. We're going to use January the 30th, and we're going to go to the 650 strike here. We're going to sell. Again, you're going to see the dynamics are pretty similar here, folks. You're going to see, again, our probability of profit here is 97%. We're going to take in about $150, so about 1.5% for placing this trade. We're happy enough to place the trade. We're going to click on order. So remember, you're selling here. The quantity is 1. We're going to use a market because the options market now is open more than an hour, so we're happy enough with the bid-ask spreads on this. We click on sell order, and there we go. Our order has been filled. We're now filled on this particular trade. So if I come into our portfolio, I'm going to show you what it looks like. You can see this is our XSP. You'll see our position is -1 here. That's because we didn't buy the put option, we sold it. You can see the premium we actually took in was $130. About 1.3% we stand to make in this trade over the next 9 days if XSP stays above 650. So very, very similar trade to what we put on earlier, guys. It's a short put strategy. If you're not au fait with the short put strategy, we would encourage you to go to our option trading courses. This time, if you're going to do it in IBKR, go to our traditional option trading courses, and you'll see them under the income engine credit strategies, and click on short put option strategy. And there's basically a full course there on what it is and what we need to do. So the final thing I'll talk about here, folks, is risk management. So now we've done this part of it. We have the trade on. We know that there's a great chance of us winning on it, but you know what? Things can happen. We don't know how Davos is going to go. Things can start to fall. So our trigger on this trade will be like 6,600. So if the S&P gets down to 6,600 here, we're going to basically roll out and down. What that means is we're going to reduce our break-even price even further. We're going to take evasive action on the trade. So let me show you what that means. If we go back into our option chains here, we know we took in 130 in premium for XSP. You'll be doing it on SPY, most of you will be. So when we do it on this, I want to see out to the end of February, what are we actually going to get here in terms of premium and what strike price will we be able to lower it down to. So now I'm going out to check the end of February strike here. So we're going all the way out to February the 27th here. And I'm going to stroll all the way down here to see where will the bid price bring me in, roughly 133 here, for example. So it's going to take a little bit of time. So you can see here where this is giving me a lot of encouragement, guys. So this is telling me I'm going to be able to roll this out and down, way down to the low 600s on this trade if it starts coming under further pressure. So this is great news because so in other words, we know that we received in 130 for the contract we just opened. If we were to buy ourselves out of it now, for example, we'd pay 130, but look what we do. If we sold the 606 for February, we'd take in 199. That'd be a net credit of an extra $60 there. So this trade, as long as we take evasive action, if it starts getting under further pressure, 6,600 is my level. So I'll go to my charts now, or you can do it in Interactive Brokers. You're putting in an alert here. So I'm going to just right click on my charts here, and I'll be able to put in an alert in there. So I'll just go in here. We can click on add alert at 65.95, price crossing down. And once that's in there, that'll basically trigger me and tell me once that price is hit. And I'll know to go in then, roll out and down on the particular trade. Okay, I hope that makes sense. If you have any questions on any of that, folks, please, you know where I am on WhatsApp, or go to the members area of the website. Click on the bubble on the bottom right hand corner, sharenavigator.ie, and you'll be able to chat with us directly there via the chat bubble too. Okay, thanks and bye for now.